Hiya guys, I'm EvolveHumans and welcome to my channel. Now before we get started, please make sure to leave a like, subscribe and leave a comment down below so YouTube can know if you like this content, and I'll respond to all the comments, so let me know what you think. Be honest. In this video, I'm going to teach you how to be rich. Now, I know what you're thinking. Out of the blue, right? Great, another clickbaity channel. No like for you. But wait, let me tell you about a man named Robert Toru Kiyosaki and his book Rich Dad, Poor Dad, one of the most influential finance books ever written. I've read a few. Kiyosaki is a famous American author, personal finance teacher, real estate tycoon, among others, worth $80 million. Man knows what he's talking about. And his bestseller book is all about creating wealth, assets, and building the bridge to financial freedom brick by brick. Robert Kiyosaki was born in Hilo, Hawaii, in 1947, to a normal family just like you and me. His dad, so-called poor dad, had a PhD, was a prominent academic, and had a great salary, but could never get ahead of his bills. In 1956, at 9 years old, Robert saw the rich kids at his school excluding him and his best friend Mike because they were poor. And that's when he asked his dad how to get rich, how to make money. His dad simply said, "Obviously, learn to make money." "How?" Robert asked. Poor dad thought about it and answered, "Use your head," which basically meant he didn't have any idea. Shortly after that was when he met Mike's dad, or Rich Dad. Rich Dad wasn't rich back then, but he would eventually become one of the richest men in Hawaii using a few simple but powerful lessons that Robert explained in this book. So Rich Dad tried to teach Robert. To start with, he told him to work for 10 cents an hour in a convenience store that he owned. Robert toiled day after day, and after a month of brushing off dirt from cans, Robert was sick of it and confronted Rich Dad, wanting to quit. And this was exactly what Rich Dad was waiting for. He had taught Robert an invaluable lesson that day, not by lecturing, but by living it. "Life pushes all of us around," he said. "Some people give up and others fight. They learn the lesson and push on. They don't quit and find another equally bad job." Rich Dad told Robert that the poor and the middle class work for money. They wait for a raise, promotion, or a lucky break and are forever controlled by two emotions, fear and greed. Fear causes us to wake up and make money to pay the bills. Greed makes us want all the luxuries money can buy. And that is when they get trapped. They're eternally stuck in the cycle of get wages, pay the bills with these wages, get more wages, pay more bills, and that's what Rich Dad calls the rat race. The rich, on the other hand, have money work for them. They do this with a thing called financial intelligence, and that was when a light switched on in Robert's head forever. So what is financial intelligence? First of all, it's not a skill you learn in school. It is based on the fact that it's not how much money you make, it's how much money you keep. A simple example of this is lottery wins. They lose their money just as fast as they win it. They have no financial intelligence. The best way to keep your money, said Rich Dad, is through assets, and the best way to lose it is through liabilities. And this may be one of the most important lessons in the whole book. Rich people acquire assets, the poor and the middle class acquire liabilities that they think are assets. Simple, right? Not quite. You must first know the difference between an asset and a liability, and then buy assets. In simple terms, an asset puts money in your pocket, a liability takes money out of your pocket. Assets can be anything from stocks and bonds, rent-paying real estate, royalties, and anything that pays you for owning it. Liabilities are your car, your mortgage, credit cards, and even your house. Basically anything that you pay for owning and never puts money back in your pocket. Assets are so powerful because they create cash flow. Cash flow is basically where your money goes and what it does for you as you receive it. This is the cash flow of a poor or middle class person. The income goes straight to expenses and never go to assets. To make matters worse, they have a bunch of liabilities which slowly bloat the expenses columns and inevitably make it harder and harder to keep up and escape the rat race. This is the rich person's cash flow. Notice, their income goes straight into their assets because they pay themselves first and keep expenses low. Over time, the income column grows and grows until the assets alone can cover expenses, which is the definition of wealth. Wealth, says Kiyosaki, is a person's abilities to survive so many number of days forward. Or, if I stop working today, how long could I survive? and that is the reason for everything. Robert Kiyosaki battled hard for wealth, and his objective was to acquire his independence from working forever at 40. He managed it at 47. Close enough. Now he works because he wants to, not because he needs to. He has exited the rat race. So how do the rich keep their wealth? Rich Dad just played the game smart, and he did it through corporations, the biggest secret of the rich, saving money on the largest expense of all, taxes. Rich Dad taught that even while you are slaving away for a company, you are also working for the government at the same time. How so? Kiyosaki estimates that the average American works from January to May for the taxman, which is the general trend worldwide. And with a pay rise, they also get a tax rise, because they sometimes go to a different tax bracket. Tax brackets are a discussion for another time, but basically it means, depending on how much you earn, you pay a greater percentage of your earnings in tax. What do some people do about this? Some avoid paying taxes altogether through all sorts of illegal methods. I wouldn't really recommend that. Eventually they get caught and they have to pay back all they stole, and they get the added bonus of being in prison. Rich Dad avoided them legally through corporations. Kiyosaki explains a corporation as merely a file folder with some legal documents in it, sitting in some attorney's office and registered with a state government agency. The magic is that the income tax rate of a corporation is less than the individual income tax rates, and you can pay expenses with pre-tax dollars. Basically, this means you can buy a company car, company lunch, company conference, and a 5-star hotel on the beach of Balneário Camboriú in Brazil as company expenses, and be taxed on whatever profit is left over. Your money is working for you, not the government. Most billionaires use this to their advantage. Bill Gates, Warren Buffett, Richard Branson, Georges Paul Lemoine, for example, have made billions and billions and billions and have never paid taxes on most of their money. This is because they hold on to most of their assets forever, don't sell, and therefore don't have taxable income, and hardly ever give the taxman his due. Legally. Money in the asset column is money that should never come out again, because it's the most hard-working money you will ever have. That is financial literacy. Let's do a recap. Rich Dad taught Kiyosaki that he must have assets instead of liabilities, and whenever he got a paycheck, he should pay himself first and add to his assets, while keeping liabilities low. These assets would inevitably grow and grow until they cover the liabilities, making him a wealthy man, a free man. These investments into assets should all be done via corporation, to pay the taxman, the greatest liability, the least amount of money possible, and accelerate the accumulation of wealth, accelerate his own freedom from the rat race. That is why Rich Dad and Kiyosaki constantly learned and constantly yearned for wealth, because in a free country, being a free person is always better than being trapped. We all tread different paths through life, but Kiyosaki showed us the way to unshackling whatever holds us down. The question now is, how hard will you fight to break free?